Good morning, and welcome to TOPIX Japan Market Radio for Thursday, January 15, 2026. I'm your host here in Tokyo. This show is designed for global investors tracking Japanese equities, currency, and rates in real time. Let's dive straight into today's market action.
Thank you. So we had a mixed session across Japanese equities today. The Nikkei 225 closed at 54110.5, down 0.425%, pulling back from recent record highs. Meanwhile, the TOPIX finished at 3854.0, up 0.785%, showing relative strength in the broader market. The Mothers Index surged 4.4% to 2278.0, and the J-Right Index gained 0.532% to close at 2079.5. On the currency side, dollar-yen traded at 158.574, down 0.38% on the day. Commodities were weaker, with gold in yen terms falling 0.883% to 17,405.0, and crude oil dropping sharply by 4.386% to 59.3.
That's quite a divergence between the Nikkei and the TOPIX. We'll unpack that in a moment. But first, let's talk about what drove that sharp drop in crude oil prices today. Reports indicate that President Trump has dialed back his rhetoric on potential military action against Iran. How should investors interpret this shift?
This is significant for Japan, given its position as one of the world's largest oil importers with almost no domestic energy production. The de-escalation rhetoric has led to this nearly 4.4% drop in crude prices, which directly improves Japan's import cost structure. Lower oil prices reduce the trade deficit, ease domestic inflation pressures, and lower input costs for energy-intensive manufacturers and logistics companies. That's a tailwind for corporate margins across a wide range of sectors.
So that should be positive for Japanese equities overall?
Moderately positive, yes. The benefits flow especially to exporters and domestic-focused companies that rely heavily on energy inputs. However, there are some offsets. Lower oil prices can weigh on refiner margins and energy sector valuations. And from a currency perspective, cheaper oil reduces one driver of yen strength, namely the improvement in the current account from lower energy import bills. So we might see modest yen weakness as a result, though the effect today was actually a slightly stronger yen due to other factors we'll discuss.
And what about Japanese government bonds in this environment?
Lower oil prices tend to reduce inflation expectations, which would normally support demand for JGBs and push yields slightly lower. There's also a modest flight to safety bid when geopolitical tensions ease but uncertainty remains. So the overall impact on yields is probably a gentle downward drift, all else equal.
Staying with the yen theme, there's been considerable focus today on the 160 level in dollar-yen. Reuters reported that fears of Bank of Japan intervention are keeping the pair capped below that key threshold. Can you walk us through why 160 matters so much?
The 160 level has become a psychological and policy line in the sand. Market participants believe that if dollar-yen pushes significantly above 160, the Bank of Japan and the Ministry of Finance may step in to support the yen. A weaker yen benefits Japanese exporters by making their products more competitive abroad, but it also risks importing inflation, especially for energy and raw materials. Japanese policymakers have signaled in the past that they're willing to intervene to prevent excessive yen depreciation, so this level carries real credibility.
How does that intervention risk shape the outlook for Japanese assets right now?
For equities, it's a mixed picture. On one hand, a weaker yen supports large-cap exporters and manufacturers, which are heavily weighted in the Nikkei. On the other hand, if intervention fears cap further yen weakness, that limits the upside for those export-driven names. Financials and insurance companies may underperform because intervention expectations can reinforce lower yield environments. On the currency itself, we're likely to see continued range-bound trading around 160 unless we get a major macro catalyst that overrides the intervention risk.
And JGB yields?
Intervention expectations tend to support JGB prices, which means lower yields. If the BOJ signals a willingness to act, that's perceived as a hawkish stance on currency stability, which can reinforce defensive positioning in bonds and reduce long-term inflation concerns. So the net effect is probably modest downward pressure on yields.
Shifting back to equities, let's talk about that divergence we saw today between the Nikkei and the TOPIX. The Nikkei slipped from its record high, driven by weakness in technology stocks, while the TOPIX actually advanced. What's the story there?
This divergence is quite telling. The Nikkei's recent rally to record highs has been heavily dependent on a handful of mega-cap technology stocks, so it's a narrow leadership base. When those tech names pull back, the Nikkei feels it immediately. The TOPIX, by contrast, is much broader and includes more domestically oriented and cyclical names such as financials, industrials, and construction. The fact that the TOPIX advanced today suggests there's underlying demand and rotation happening beneath the surface.
Is that rotation a positive sign for the sustainability of the rally?
It can be, if it reflects genuine broadening of investor interest beyond just tech. A rally that's overly concentrated in a few names is vulnerable to sharp corrections when sentiment shifts. Broader participation across sectors tends to signal healthier, more sustainable market dynamics. It also hints at shifting macro expectations, perhaps around domestic demand recovery or anticipation of Bank of Japan policy adjustments. That said, we need to watch whether the tech weakness accelerates. A sharper correction in tech could trigger broader risk-off sentiment, which would support the yen and push JGB yields lower as investors seek safety.
So near term, do you see more downside risk for the Nikkei, or is this just healthy profit-taking?
It's likely a bit of both. The Nikkei had been on a strong run, so some profit-taking is natural, especially in momentum-driven tech names. Near term, there's some downside risk if the correction deepens or if global tech sentiment weakens further. But the TOPIX's relative strength suggests that if investors rotate into value, cyclicals, and domestic plays, the broader market can hold up reasonably well. The key will be whether risk appetite remains intact or whether we see a sharper flight to safety.
And in that scenario, yen and JGBs would be the beneficiaries?
Exactly. Any sustained equity weakness, particularly in risk assets like tech, tends to support the yen as a safe haven. We'd also expect to see flows into JGBs, pushing the 10-year yield lower. But for now, the moves are modest, and the overall tone remains cautiously constructive.
Let's bring it all together for our listeners. We've seen de-escalation in geopolitical tensions leading to lower oil prices, which is broadly supportive for Japan's import-dependent economy. We've seen intervention fears capping dollar-yen below 160, which creates a near-term ceiling for the currency pair. And we've seen this interesting divergence in equities, with the Nikkei pulling back on tech weakness while the TOPIX advances on broader participation. What should global investors focused on Japan be watching most closely in the days ahead?
I'd highlight 3 things. First, watch the dollar-yen level around 160 very closely. Any decisive break above that level, or any actual intervention by the BOJ, would be a major catalyst for volatility across all asset classes. Second, monitor whether the rotation out of tech and into broader cyclicals and domestics continues or reverses. That will tell us a lot about the sustainability of the equity rally. And third, keep an eye on oil prices and any further commentary from US or Middle Eastern policymakers. Energy costs are a major structural driver for Japan's economy and inflation outlook.
All very actionable themes. For our global audience, Japan remains a market where policy expectations, currency dynamics, and sector rotation are tightly interwoven, so it pays to watch all 3 simultaneously. If you're tracking Japan exposure or considering allocations, make sure you're following these themes closely. And if you found today's discussion useful, please consider subscribing to TOI Japan Market Radio for daily insights tailored to global investors.
Thanks for having me. Always a pleasure to break down the Japan macro picture.
Thank you. That's all for today's edition. We'll be back tomorrow with more analysis on Japanese equities, currency, and rates. Until then, stay informed and stay disciplined.